Hi, Todd Vandenberg here with Vandenberg Capital Management and another Uncommon Sense update. So I've got a couple of things to talk about today. The first one that I'm going to talk about is the SBA. I talked a little bit about it last week, but I'm going to go into a few more details. And the second thing I'll talk about has to do with municipal bonds and municipal bond funds. I'm not going to talk about the market performance. The last week and a half, we've had some pretty good performance in the markets. We're not nearly back to where we were at our highs, but significant moves to the upside, which is just even more evidence why our keep your cash reserves safe and be patient with your equity investments is just going to continue to be our recommendation for the foreseeable future. But here we go. The SBA. So I talked about some loans that the SBA is issuing through the CARES Act, and that these loans are forgivable. But I need to go into a little more detail because there's really two different kinds of programs. The first one is called the EIDL. It's the Economic Injury Disaster Loan, and that loan is directly done through the SBA. So you go to their website. I provided a link last week. You apply, and on the very last page of the application, it asks, would you like up to a $10,000 advance? And if you answer yes, then you can receive up to a $10,000 advance. Every bit of that advance does not have to be repaid. However, if you continue forward with the SBA loan and they approve you and they give you a loan, that loan above the $10,000 will have to be repaid. Now, the interest rate will be good, the terms will be good. If you were thinking about getting a business loan anyway, this might not be a bad time to do it, but I just wanted to make that point clear. Now, the second program that came through the SBA and the CARES Act is called a PPP, and that's the Paycheck Protection Program. Now, this program is really different from the EIDL. In the PPP, we have funds being made available to small businesses, again, sole proprietors, self-employed, people with under 500 employees, and that includes some foundations, that they're going to make money available to you so that you don't let go of your employees. And if you use the money that they give you for payroll and rent and basically to keep your business open, then you don't have to pay it back. So this is the loan that most people should be focusing on. But unfortunately, what I've found over the last several days is that people are focusing on the EIDL because it's really easy to apply for. You just go to the SBA website, fill in a couple of numbers, boom, you're there. The PPP actually has to be done direct through a local bank who is an SBA 7A approved lender. Now, odds are your bank is probably SBA 7A approved, so you have to get in line. There's a lot of people applying right now, but these are the funds that are intended to help small businesses make payroll and not let go of their employees. So please, forward this video on to everybody that you know, even if they're not a small business owner, because they might know somebody who's applying through the EIDL program thinking that they're going to get money that they don't have to repay. It's the PPP with the application being done through your local bank that's the one that is, I think, of greatest benefit. The second thing I want to talk about has to do with municipal debt. So muni bonds, muni bond funds. Now, muni bonds typically have, they're not taxed at state or federal levels in many cases. So they have great tax treatment. They generally have been considered safe, except during the financial crisis. The default rate has been relatively low. But now we're in this uncharted time when many state, local, county governments are having trouble with their cash flow because they're not getting as much money in tax revenue, and they're having to pay more money out in services that they had never budgeted for. So what I'm telling everybody right now is if you own a municipal bond fund or individual issue municipal bonds, you want to take a really good, long, hard look at those things and make sure that the underlying entity that is, guaranteeing the payment on that bond is as stable and financially sound as any entity could be. Because while they have great tax treatment and the interest rates sometimes are pretty good too, that won't mean much if they file for bankruptcy, as Valeo did during the financial crisis, and wiping out all of the people who had these bonds. If anybody has any questions about their municipal bonds or municipal bond funds, please just reach out to me. I'm happy to answer any questions. We're not making any investment recommendations. I'm not telling people that they should sell them all or buy a bunch. I'm just saying that this is an area of your investment portfolio that you're going to want to take a good long look at while there's still time, because the data hasn't come out yet as to how much state, local, municipalities have been impacted by, the coronavirus, health crisis, the financial impacts of the health crisis. So before that data comes out, if you're thinking that you might be at too high a risk, now's the time to get rid of them because they still have their value. So that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back soon with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.